All right. Thank you very much for keeping it with us here on Morning at NTV. Time now to look at the role of financial institutions in Uganda's economic development. There's a lot that is going on in terms of plans from the 4th National Development Plan and, of course, the 10-fold growth strategy, Vision 2040, all that you can see happening, especially with the rollout of initiatives including the PDM, Myoga. All that is designed to ensure that we reach the much needed and desired socio-economic transformation. But there are players who are critical in all this, and these are banks and other financial institutions. This morning, we want to quickly look at exactly what their role is, and maybe we can begin to turn the arc towards the transformation that Uganda needs. I'm joined on set by Veronicah Gladys Namagembe. She is the Managing Director at Pride Bank. Many thanks for joining us this morning.
Thank you so much.
Great. First, tell us about Pride Bank before we can begin to talk about what it does alongside other financial institutions in furthering the country's economic development.
Okay, Pride Bank is an indigenous institution. Started in 1985 with a branch in Mbarara. We are right now in 47 locations around Uganda, managed by Ugandans, serving the base of the pyramid, but having got our license as a bank, we are now having more capacity to serve more people within the financial sector.
All right, now you're a fully fledged bank.
Yes, please.
That is significant. Of course, you now join a pool of other banks that are at the helm of providing a critical service to Ugandans. But in light of the just passed 72 trillion shilling budget and all the initiatives therein that are aimed at helping the Ugandans get better, especially in terms of household income, we see so much rolled out through certain banks. Which one are you part of that a Ugandan can quickly know that the money, the 72 trillion, is something they can also at least chop off?
Actually, with that, we are in all. When you look at the ATM strategy, whether it is agro-industrialization, tourism, science and technology, and of course the mineral development. But for us specifically, for the government programs, we are involved in Myoga. We are also involved in the parish development model, where money is given to the groups, to the circles, to reach the last mile, and we are fully integrated that wherever they are, provided someone has the Wendy wallet, will be able to get the money. Then we also are an active partner with Bank of Uganda with the Small Business Recovery Fund. This is the fund that government set aside for people to come back to economic resilience and restart their businesses. So we are involved in that. And also the Agriculture Credit Facility, working with Bank of Uganda in specific branches of ours where agriculture is the main economic activity. Then on top of that, there is a new program that government started called the Large Scale Farmers Program. That one we are able to give farmers mainly dealing in maize, beans, soybeans, and hay for the animal feeds. Provided that this large farmer has 50 acres and above, we are able to give them interest-free loans up to the tune of 5 billion. So we are looking for such customers to ensure that there is food security, but also that to support the agro-industrialization of the ATM strategy. Yes.
I love the prong that seeks out farmers who are really doing that large scale of farming. 50 acres is a huge requirement. Many people will have lesser, and I don't know whether you can allow, and this one I'm asking because I know there's some questions out there that people would love to ask after hearing that.
Yes.
When groups of farmers come together to create the 50-acre threshold, are they also eligible for this money, or it's something that is only primed for a single farmer with 50 acres of land?
No, if this group of farmers can incorporate a company,
okay,
because we are dealing with the registered companies.
Yeah.
So if this group of farmers can incorporate a company, we are able to serve them. And they have the 50 acres. We are able to serve them.
Okay. Help us debunk a myth that many of us have grappled with, especially when it comes to rollout of government programs regarding economic rollout of money through banks. It's a government program. It is supposed to be heavily subsidized, but then we have incidents where banks go on and slap hefty collateral requirements on Ugandans who are supposed to be part of these government grants. Clarify that, because people are genuinely icked.
The way it is, even if it is a government program, you as an individual, where is your stake? Because if you remember programs like Entandikwa, many people got that money, but they didn't pay back. But now when you're able, yes, the government program is there within the interest rate, but for you to put in a stake, your personal aspect that, okay, I'm going to pay back this money, and here is my security. It also reflects your character as a person who is able to pay back. Because even if this is government money, it needs to be paid back so that, again, another person receives it for the economic development and uplifting of lives of Ugandans.
Okay.
Yeah.
Ah.
So it's not done in bad faith,
It's not bad
but it's for you to have a stake.
All right, that's perfectly understandable. I'll be going shortly to your story as your evolution story from microfinance to a bank and what that means for other microfinance institutions that are seeking to become banks. But before we do that, let me ask about the general history of banking in the country. Are we at a place we ought to be, or we are lagging behind? Has the banking industry developed at the pace that you are confident that this is it?
Thank you so much. You know, banking cannot develop in isolation without the country.
That's right.
We move with the way the country is developing. And in that aspect, I feel we are moving together. Because most times you see the growth rate of Uganda has been at 7% or 6.5%, but you find that the banking sector has grown by an average of 11%. So we are more or less in tandem.
Okay.
Yes.
All right. So we get to the question of your evolution from a microfinance to a bank. Of course, it tells that the landscape is good if an institution is able to evolve from one lesser tier to another. I don't know whether you attribute this to the positives or the fundamentals, especially with regard to economic growth, that you are at par, or should we blow and thankfully to the managers at Pride Bank for doing an extraordinary job? What is it?
It is a combination.
Combination of both, yeah.
Because for us as an entity, since beginning in 1985, our purpose is transforming lives responsibly. So as we've been serving the customers at especially the base of the pyramid, because by the time we started in 1985, our first loan was 150,000. But so many people came in because they couldn't find any financial institution that could give them that loan and collateral free, because we saw that there is a gap in bringing those people into the formal financial sector.
That's right.
So our move and vision for transformation into Pride Bank was strategic, but it is aligned with the same people that were created to serve. Because as time went on, they grew. Someone who started with 150, I have a story, several stories. One started with 150,000, is now serving 600 million. So those people needed other services that we didn't have as a microfinance institution. So we said, let us scale, let us enhance our capacity to also serve those people. Yes.
Okay, away from the government programs, there is the genuine clamor from Ugandans to access credit on terms that are favorable. And the issue of high interest rates, despite continuing appeals from the Bank of Uganda via the release of the monetary policy statement for rates to be, lower, is something that we cannot shy away from.
Yeah.
Why are rates so high? Pride Bank should be proud.
I'll tell you that the cost of doing business in Uganda is very expensive.
Okay.
So financial institutions cannot operate in isolation. When you look at the nature of operational expenses that a financial institution has to incur to serve a loan. However, that aside, it all starts from the risk-free rate. When you look at like the TBs, many people would rather say that rather than going out and disburse this loan at maybe 20% with a probability of not recovering it, let me go and put in treasury bonds or treasury bills at 12, 15%. So the cost of doing business is the one that really drives that aspect. Because some of us, we still borrow to own land. But even when you go out and borrow from the social lenders, you find you're paying at 13%. So at 13%, you also need a margin for you to operate efficiently and effectively. So of course, you have to add their margin and be able to stay in business as a going concern.
Okay. Your evolution, of course, does highlight the fact that you are at the heart of financial inclusion, especially for the lower end of the population, ones that might not be able to access the high-end services. When it comes to coverage or reach right now across the country, can we state with pride that you are everywhere, or?
Yes, like I said, we are in 47 locations.
47 locations. Around
Uganda. You go to Arua, you'll find us. Kisoro, you'll find us. Kagadi, you'll find us. Mbale, you'll find us. Yeah, so
I'm going to look out for you in Butaleja.
Okay. So Butaleja, I think, is closer to Mbale. We are not there.
All right, as we enter the final bit of this interview, there is a growing concern about the global financial infrastructure that is not favorable to Africa, especially as many of the countries grapple with debt. And calls by so many leaders have been on, especially as they meet in these international fora, for a reform to happen. Is this conversation happening within the bankers themselves so that you can have more like a push to? Or is it a case of politicians and government people crying about it?
I didn't understand your question.
The global financial infrastructure, yeah, the ecosystem is heavily skewed against Africa, and our economies are growing at, despite growing on paper, the real development is not happening at the same pace, and there are calls for reforms. Is that a conversation that happens within the commercial banks too?
Oh yes, and I'm so happy that you've asked that question, because we as financial institutions under our umbrella, Uganda Bankers Association, when we got the ATM strategy in support of the National Development Plan 4, We are in sync. We have a working committee. And most of these things that government has picked out, that these are our specific core areas, 4 pillars of developing this nation. All of them are within our reach as Ugandans. We have the land for agro-industrialization, we have the skills, we have the people that can work, we have the tourism. You can imagine there is no country in the world that has Uganda Matters. So if we are to market that, we shall be able to, it will enhance our growth for development as a country.
All right, thank you very much, Miss Veronicah Gladys Namagembe, the Managing Director at Pride Bank. It's been a pleasure having you on Morning at NTV.
Thank you too.
And that will do it, but do stay with us. Morning at NTV does continue. In our Kickstarter, we'll be talking about the state of human rights in the context of the 2026 general election and how observance of the same is rolling out across the country. Stay with us.